$340. That is the number sitting quietly in your bank's pocket by the end of this year. And I want to be clear, it is not because of one dramatic mistake. It is not because you overdrafted or missed a payment or did anything careless. It is because of one single line on your bank statement that you have almost certainly never actually read all the way through. Most people scroll past it every single month for years without knowing it is there. By the time they notice, they have paid for it 100 times over. Today, I am going to show you exactly what that fee is, exactly how the math adds up to $340 a year, and exactly what to do about it in the next 10 minutes. So grab your phone and pull up your banking app because you are going to want to check something while we talk. If you are new here, hit subscribe. I break down exactly where your money is quietly leaking every single week. So let's name it. The fee costing the average American checking account holder somewhere between $200 and $360 a year is the monthly maintenance fee, sometimes called a service fee, sometimes buried under the words account fee in 6-point font at the bottom of your statement. Here's the part that makes this one different from an overdraft charge or an ATM fee. Those fees only hit you when something goes wrong. You miss a payment, you use the wrong machine, you spend more than you have. This one hits you whether you do anything wrong or not. It charges you for the simple act of keeping your own money in an account. Banks call it a maintenance fee. I call it rent on money you already own. The national average sits around $13 to $15 a month, depending on which survey you look at. That alone is $160, maybe $180 a year, and most people who are aware of it shrug it off as the cost of having a bank account. But here's what almost nobody accounts for. That average includes basic checking. If you have what your bank calls a premium account, an interest checking account, a relationship account, anything with a name that sounds like it should be doing you a favor, the fee jumps. Interest-bearing checking accounts average closer to $15 to $25 a month, and some of the bigger traditional banks charge closer to $30. Stack that fee on top of 2 out-of-network ATM withdrawals a month, which is the national average for someone who still uses cash regularly, at roughly $4.70 each, and you're already well past $20 a month before anything unusual has even happened. And that ATM number is actually 2 separate fees stacked into one, which almost nobody realizes in the moment. The machine itself charges you for using it, and then, completely separately, your own bank charges you again for going outside their network in the first place. 2 institutions, 2 fees, 1 withdrawal, and you only ever see the combined number flash on the screen right before you confirm the transaction. At the exact moment you're least likely to walk away from a machine that already has your card halfway inside it. Let me actually walk you through the math, because I don't want to just throw a number at you and expect you to trust me. I want you to see exactly where $340 comes from, the same way I'd want someone to show me. Take someone I'll call Denise, 44 years old, works in logistics, has had the same checking account at the same traditional bank for 11 years because, in her words, switching banks felt like more effort than it was worth. Her account charges a monthly maintenance fee of $13.51. That's $162 a year on its own. She withdraws cash twice a month from whatever ATM is closest because she doesn't think about it. And 2 of those are almost always out of network at $4.70 a pop. That's another $112.80 a year. Add one thing most people forget entirely. Her account is linked to a savings account for overdraft protection, and every time that protection kicks in, even for $1, it triggers a transfer fee. For Denise, that happened 4 times last year at $15 each, $60. Add it all up, $162 plus $112.80 plus $60, $334.80. rounded the way her bank rounds everything else in their favor, and you land almost exactly on $340. Every single dollar of it for doing absolutely nothing except keeping her money where it already was. Here's why this matters so much more than people think, and here's the part that genuinely bothers me. None of what Denise did was a mistake. She didn't overspend. She didn't miss a bill. She kept her money in her own account and used her own card to get her own cash. And her bank still found $340 to take from her quietly, one small line at a time, spread across 12 months, so it never once felt like a single painful hit. That is not an accident. That is the entire design. Banks know something about human psychology that works enormously in their favor. A single $340 charge would make almost anyone call their bank immediately and demand an explanation. Nobody would sit still for that. But $13.51 once a month forever, that barely registers. It looks like a rounding error next to your rent or your car payment. Spread the exact same amount of money across 12 invisible bites instead of one visible bite, and most people never notice it, never question it, and never leave. I sat down and actually looked into how banks talk about this internally, and the term some of them use is fee tolerance, the maximum a customer will absorb before they get annoyed enough to switch. $13 to $25 a month sits comfortably under most people's fee tolerance. $340 once a year sits well above it. Same money, completely different reaction. That gap is not a coincidence. It is the business model. I want to say something specifically to the 30 and 40 and 50 somethings watching this, because this fee hits your age group harder than almost anyone else. And it's not because you're careless. It's the opposite. You're busy. You've got a mortgage or rent, maybe kids, maybe aging parents, a job that doesn't leave a lot of room in your head for reading the fine print on a bank statement you've had for a decade. 19 years, that's the average length of time Americans keep the exact same checking account, according to Bankrate's own research. 19 years of the same account means 19 years of the same fee structure, quietly compounding in the background, while you were focused on things that actually mattered that week. Banks know this too. Loyalty in banking isn't rewarded, it's the thing that gets billed. And here's the part that takes this from annoying to genuinely expensive, because the monthly fee is only half of what your bank is quietly costing you. The other half doesn't even show up as a fee on your statement at all, which is exactly why almost nobody catches it. If you're keeping any meaningful amount of money sitting in that same checking account or in a savings account at the same traditional bank, there's a very good chance you're earning close to nothing on it. A lot of the big traditional banks are still paying somewhere around 1/100% in interest on savings. Meanwhile, high-yield savings accounts, the kind offered by online banks with no branches to maintain, are paying somewhere between 3 and 4% right now. Let's say you keep $8,000 sitting in that low-interest account, which is a completely normal amount for someone with a modest emergency fund. At 1/100%, that $8,000 earns you less than $1 a year. At 3.5%, the same $8,000 earns you close to $280 a year. That's not a fee. Nobody sends you a bill for it. It's just money that was always available to you and simply never showed up because it never had to. Add that to Denise's $340 invisible fees, and her real annual cost of banking, exactly where she's always banked, is closer to $600. $600 a year for doing nothing differently than she's done for 11 years running. I want to pause here and tell you something, because a lot of you comment asking how I actually catch things like this in my own accounts. And the honest answer is I didn't used to. I used to be exactly like Denise, same bank since college, never questioned a single line item, assumed that if something was wrong, my bank would tell me. They will not tell you. I promise you that. I went back 3 years ago and actually printed out 12 months of statements from an account I'd had forever and sat down with a highlighter like I was studying for an exam. I found $290 in fees I had never once noticed leaving my account. Not stolen, not fraudulent, completely legal, completely disclosed somewhere in a document I'd signed and never read. That's the moment I started actually paying attention to this stuff. And it's honestly the whole reason this channel exists. And before we get to the fix, let me put this number somewhere you can actually feel it. Because $340 a year sounds small the way any monthly bite is designed to sound small. But you're not watching this channel because you want to think about money 1 year at a time. Take that same $340 and instead of letting it disappear into fees every year, put it into an investment account earning a conservative 7% average annual return, which is roughly what the market has done over long stretches historically, over 10 years, contributing that same $340 every year. You're not looking at $3,400. You're looking at somewhere around $4,700 because the earlier contributions had time to grow. Stretch that same habit over 25 years, which for a lot of you watching this is the distance between now and retirement. And that number crosses $25,000. $25,000 from a fee so small most people can't even tell you what their bank charges them without opening the app. That's not a hypothetical. That's just what happens when you stop leaking money and start directing it somewhere that compounds instead. Some of you are going to hear all this and think it's still just $340. It's not going to change my life either way. And look, I get it, on its own it isn't. But I'd push back gently on that because the habit of not checking is the actual problem, not just this one fee. If a bank can quietly take $340 a year from you without you noticing for 11 years running, what else is sitting in your financial life right now that you've never actually gone back and checked? A subscription you forgot you had, an insurance policy you're overpaying on, a 401k with fees eating into your returns that you've never once looked at. This fee is rarely the biggest leak in someone's finances. It's just usually the easiest one to prove because it's sitting right there on a statement with your name on it, waiting for someone to actually read it. So here's what I want you to actually do, and I mean actually do this today, not add it to a list you'll get to eventually. Comment below and tell me the name of your bank and whether you even know your monthly fee off the top of your head. I'm genuinely curious how many of you can answer that without opening the app. Pull up your bank statement right now, the most recent one, and look for 3 specific things. First, search for the words maintenance, service, or account fee. It's usually a line item somewhere in the middle of the statement, not the top, because banks know the top is what you actually read. Second, look at how many times in the last 12 months that fee actually appeared. Some banks waive it if you meet a requirement, direct deposit, minimum balance, a certain number of card swipes, and the fee only hits in the months you slip below that line. If you see it charged even 3 or 4 times a year, you're already looking at $40 to $60 gone for something you could have avoided with one phone call. Third, check your savings account's actual interest rate, the real number run, not the name of the account. If it starts with 0.0 anything, that's your second leak, the invisible one, sitting right next to the visible one. If you're doing this on your phone right now, here's exactly where to look. Because most banking apps bury this on purpose. Open your app, go to your checking account, and look for a tab that says Statements or Documents, not the transaction feed, which usually only shows you the last 30 or 60 days and lets older fees scroll out of view. Pull the most recent full statement, the PDF, and use the search function if your phone lets you search within a document. Type in the word fee. Every single instance will show up in seconds, and I promise you, most people who do this for the first time are surprised by how many results come back do the same. Search for the word waived, because if you see that word anywhere, it means your bank already has a system in place to not charge you this fee. You just haven't met whatever condition triggers it. And that's usually a fixable 5-minute problem, not a permanent one. Here's what those waiver conditions usually look like. In case you found the word waived on your statement and want to know what you're actually working with, most traditional banks will drop the fee entirely if you set up a qualifying direct deposit, usually somewhere between $500 and $1,000 a month, which covers most people's paycheck without them having to do anything extra. Some will waive it instead if you maintain a minimum daily balance, often somewhere between $1,500 and $2,500, sitting untouched in the account at all times. Miss that minimum by even $1 on one day of the month, and the entire fee gets charged for that whole month, not prorated, not partial. That's the trap Denise fell into. Her direct deposit was set up correctly, but she'd occasionally dip below her minimum balance requirement in weeks she paid a large bill. And every single time she did, the fee hit in full. Now, the fix, and I want to give you the exact words to use, because vague advice doesn't get results, and I'd rather hand you something you can actually say out loud. If you called your bank right now, here's what I'd tell you to say. I've been a customer for however many years, and I'd like to know if my monthly maintenance fee can be waived or if there's an account tier with no fee that I qualify for. That's it. That single sentence gets the fee waived for a meaningful number of people who ask, because banks would genuinely rather keep you as a customer at zero-fee revenue than lose you entirely to a competitor. The fee from the bank side isn't the point. Keeping your deposits on their books is the point. They can absolutely afford to let it go if the alternative is losing your account completely, and most retail bank representatives have the authority to waive it on the spot. They just never offer to unless you ask directly. If they say no, or if you want to just remove the problem permanently instead of negotiating around it every year, the honest move is switching to an account that structurally can't charge you this fee in the first place. Online-only banks, the kind with no physical branches to maintain, routinely offer checking accounts with no monthly fee, no minimum balance, and reimbursed ATM fees, because their entire cost structure is lower and they're competing hard for your deposits. Several of them also pay 3 to 4% on connected savings accounts instead of the fraction of a percent your current bank is probably paying. Moving your money isn't the hassle people think it is anymore. Most of it can be done from your phone in under 15 minutes, and your direct deposit typically just needs one updated routing number with your employer. There's also a category a lot of you overlook entirely, which is your local credit union. Credit unions aren't chasing shareholder profit the way a publicly traded bank is, because their customers are technically the owners. And that structural difference shows up directly in their fee schedules. A large share of credit union checking accounts carry no monthly fee at all, no minimum balance games, and often better rates on savings than the big traditional banks are offering. If you've got one nearby that you qualify to join, through an employer, a community affiliation, or even just your zip code in a lot of cases, it's worth a 15-minute look before you assume an online bank is your only fee-free option. I'm not going to tell you which specific bank to use, because what matters for your situation is different than what matters for someone else's, but I will tell you this. If the account you are comparing against charges any monthly fee at all in 2026, that is not a normal cost of banking anymore. It is a choice you're making, whether you realize you're making it or not. Let me give you the other side of this though, because I don't want to leave you with the impression that fixing this is only about saving money passively. There's a man named Rashid who commented on one of my earlier videos 41 small business owner who told me he'd been paying $29 a month at his business bank for a premium business checking account he'd opened when the business was new and needed features he no longer used. $29 a month is $348 a year, almost the exact number we've been talking about, just in a business account instead of a personal one. He told me he called, asked the exact question I just gave you, and within 6 minutes his bank moved him to a no-fee tier that did everything he actually needed. He didn't switch banks, he didn't fill out paperwork. He asked one question and saved $348 a year permanently going forward every year for as long as he stays on that tier. That's not a one-time saving. That compounds. 5 years from now, that's over $1,700. That simply never leaves his account again. Money that used to disappear so quietly, he never thought to ask where it went. What actually got me about Rashid's comment wasn't the number, honestly. It was the line right after it. He said he'd assumed for 3 years that the fee was just what business banking cost, the same way Denise assumed $13.51 was just what checking accounts cost. Neither of them was wrong to assume that because nobody had ever told them otherwise. That's the pattern I keep running into over and over in almost every comment section on this channel. It's never that people can't do the math. It's that nobody ever hands them a reason to open the statement in the first place. That's genuinely the only thing standing between you and this number going to zero. Not effort, not financial sophistication, just the decision to actually look today instead of assuming your bank would have told you if something was wrong. That's the thing I want you to sit with for a second. This isn't really about $340. The number in the title is accurate and it's real. And for a lot of you watching this, it's probably close to what your own statement is going to show when you actually go look. But the real cost isn't the dollar figure. It's the fact that this fee has been running in the background of your financial life, completely legal, fully disclosed, somewhere you never read, for years, without a single alarm going off. Nobody at your bank is going to call you and say, "Hey, you've been paying us $340 a year for nothing. Would you like us to stop?" That call does not exist. It will never exist. The system is not built to alert you to money you're losing. It is built to assume you won't notice. And for most people, that assumption is correct right up until the moment they actually check. So check, not eventually, not this weekend if you remember. Right now, while this video is still open, pull up that statement, search for the fee, look at the interest rate on your savings, and do the math the same way I just walked you through with Denise. Whatever number you land on, I promise you, you are not the only person watching this who's about to be genuinely surprised by their own number. I'm Faisal. Thank you for listening to Sheikh Faisal.